people look at Coinbase as a exchange for buying and selling crypto assets. I would argue that Coinbase is well beyond just a crypto exchange. They are really building the Amazon AWS of the crypto economy. If you think that crypto is going to grow, Coinbase is going to have a role in a lot of that development, way beyond just buying and selling Bitcoin or Ethereum.
Hi everyone, it's Julie Verhage Greenberg here with your Tux Time podcast from Fintech Today, where we talk about all things fintech. In this episode, I am joined by Director of Financial Technology Research at JMP Securities, Devin Ryan. Devin, I have not talked to you in a while. We go way back. I used to work with you quite a bit when I was at Bloomberg covering what was going on in this space. What was your title back then? I feel like this is a new title where it's more formalized that you are the fintech guy over there now.
Yeah, thanks, Julie. Great to reconnect here. So my background's really equity research for nearly 20 years. My start was in kind of traditional financial services companies, so banks, investment banks, asset managers, and I still cover a lot of those firms today. Goldman Sachs, Morgan Stanley, Charles Schwab, Blackstone, large kind of relevant traditional players. But really the last decade, particularly coming out of the financial crisis, I got really interested in where technology intersects with financial services, because it was very clear that there was a big opportunity for platforms to not only disrupt, but provide kind of a better user experience and scalability on a technology backbone. And so we started to spend a lot of time in the fintech world and getting to know a lot of the private companies, many of which are now just starting to go public. So I've been formally in this role from earlier this year, but kind of still bridge the gap between traditional financial services and all the cutting edge fintech platforms that we've gotten to know pretty well over the years.
Yeah, you and I joked before we started recording that each of us has very good job security right now.
It's a busy time in the space. It's been a lot of fun. This past year, especially just with firms starting to go public, in the space, and you're just seeing a lot of capital go into the fintech world, and I think that's happening across the spectrum, whether it's consumer-facing platforms, whether it's business to business, some great infrastructure kind of picks and shovels firms out there, and payments is a huge space as well. So there's just a lot of innovation happening, a lot of capital flowing into the space.
I remember some of the initial conversations we had was largely around both Goldman and their markets product, as well as some of the robo-advisors. Where are you spending most of your time these days outside of two of the well-known IPOs? Robinhood and Coinbase are two that you cover a lot.
Yeah, I think a lot of time has been around the theme of holistic financial services. And this is something I think you and I probably spoke about years ago, where we had written a lot about technology being utilized to connect together different financial products and really create a democratization of access to products. And you're seeing that happen now. And so it's both the democratization of financial services, but also really the scalability and the connectivity between products and services. And so this kind of holistic all-in-one platform. We're seeing a number of firms that have recently gone public, whether it's firms like Robinhood or SoFi, that really are looking to deliver, I think, an experience to the end consumer that kind of hits across their financial service needs, optimizing their assets and liabilities. And so that's something we've spoken about a lot for years, and now it's really starting to accelerate. So that's one place we're spending a lot of time, and the newer theme in there is digital assets and crypto, and that's a big focus of some of these companies. But we're also spending a lot of time just getting to know the crypto ecosystem and the digital assets firms. There's just a huge infrastructure building underneath this $2.5 to $3 trillion asset class. We estimate there's $500 billion or so of value in the companies that are providing the on and off ramps to that space. So we're spending a lot of time there and getting to know a lot of those companies, and have been doing that for years. And then I think that another big wave of opportunity in fintech is going to be in the picks and shovels to financial services, meaning the firms that are helping aggregate data, provide AI, fraud management. There's a lot of opportunity for companies to be the kind of that next generation of infrastructure to financial services, software providers. And so that's another area where we're spending a fair amount of time, and I think is a big opportunity for the market.
So I mentioned too that you cover that are public, and for those that don't know, that when analysts cover different stocks for banks, they usually have different ratings on them and price targets. What are your ratings and price targets on these firms that have gone public in the past year that our listeners are super familiar with?
Yeah, what I would say is a couple of them are, it's always a bit stale because we're not writing research reports every day. So the price targets are a little bit of a moving target. But, firms like Robinhood, Coinbase is maybe two examples. We have market outperforms on both of those. Those are kind of more recent additions to the public company mix. And I think, are very different companies in some ways, but also have followed somewhat of a similar path in terms of both have been incredibly successful at really growing their customer base. And you don't do that out of nowhere. You do that by delivering a product or service that's differentiated, but they're very good at scaling and scaling new products and ultimately bringing in customers for very reasonable cost of acquisition. And so both companies have had pretty exciting trajectories thus far, but we're still bullish on both moving forward. Robinhood is a bit of a story around, can they become one of the successful single money apps out there? And it's a concept that I think people are somewhat dismissive of because it's been talked about for decades. I remember covering banks 20 years ago, and this big theme of cross-selling across a bank and being able to become kind of that financial supermarket, and never really succeeded. One of the reasons it didn't succeed is because you didn't have technology that was scalable, which is very different today, and it was also really an awful kind of customer experience. And so I think some of the friction points that existed 20 years ago don't exist today, and I think technology can be harnessed in the data that really is rich that you can generate from this holistic relationship with the customer is going to enable firms to be able to offer a full suite of financial products, and that's going to be a compelling offering. And so I think we're in the early innings of kind of that coming through, but we're starting to see firms like Robinhood, like SoFi, start to gain some traction there. And then Coinbase is interesting because I think people look at Coinbase as a exchange for trading, buying and selling crypto assets, and that's obviously where they've had a lot of success and generates the majority of the revenues today. I would argue that Coinbase is well beyond just a crypto exchange. They are really building, and I've drawn this analogy before, kind of the Amazon AWS of the crypto economy. And so what that means is that if you think that crypto is going to grow, and I think we're in the first inning of kind of this crypto economy developing, Coinbase is going to have a role in a lot of that development, way beyond just buying and selling Bitcoin or Ethereum or some of the other assets that people generally know. So Coinbase, to me, they're the most developed in terms of strategy around kind of the future of crypto. They have a lot of experience. They've clearly made mistakes over their 9-year history, but that experience is incredibly valuable in a world that's complex. Having unique custody issues in crypto, unique regulatory uncertainty in the crypto space, and also the engineering capabilities that are required to succeed here. And Coinbase has all of those. So a lot of firms that are interested in entering the crypto space today, have some of the attributes you need, whether it's resources or they understand potentially where the market is going, but they don't have that engineering expertise or vice versa. So I think that for Coinbase, they're in a great position where as this market evolves, a lot of firms that people from the outside, investors of ours and even probably some on the sell side as well, think are going to ultimately become competitors of a firm like Coinbase are really going to be their clients or their partners. And I think you see one example of that is this Facebook wallet, the Novi release, where Coinbase is going to be the custodian there, and I think that there's going to be probably more to do in partnership, and so there's a lot of opportunities for I think large firms to enter the space, and Coinbase has a lot of experience to be helpful there. Just as Amazon, as they solved a lot of complex problems early in their history, said let's open up our platform to outside companies because we're confident in what we've built. So I think Coinbase is in a great position. So a lot of exciting things. The last point, and this kind of goes across the spectrum in fintech, is, as analysts here, we tend to think about what we know, right? And you're modeling what the company has already announced, as product suite or solutions they already have in place. And so you're projecting out what that looks like into the future. But what we don't do very well is project innovation, project what is unknown, because you just definitionally don't know it. And so I think that's where there's huge optionality, huge opportunity for some of these companies that are incredibly well capitalized. There's going to be tremendous innovation as we think about the next few years here, and there's going to be a lot of things that happen that are not kind of in the playbook that we're all thinking about or looking at right now. Coinbase, great example. The NFT launch or the announcement a month or so ago, that was not expected at all. It makes a lot of sense, but they had 2 million people on their waiting list in a week. And that's potentially hundreds of millions of dollar business that nobody was projecting. So those are just a couple examples of what gets us excited. But I think just the ability to connect together financial services and scale financial services in a way that hasn't happened in the past is really what's exciting about the future here.
Yeah, you basically touched on the entire reason why I own some shares of Coinbase. So I appreciate you going into all of that. We're on the same page on that one too. Looking into valuing these companies, getting those price targets and everything. You kind of touched on this in your past answers, that a lot of these companies are launching new things so quickly that it's got to be really tough to get price targets on these things. And like you said, you try to update them as much as possible, but it's sort of a moving target in many cases as well, since you don't publish on each of them every single day. What are some of the biggest things that you are focusing on right now in sort of implementing those targets, or at least deciding whether something is going to outperform or underperform the broader market?
Sure. I mean, ultimately, these are growth stories. So first and foremost, you need to have a growth trajectory that you have conviction in, and that's exciting, because if you don't have growth in some of these high multiple fintech names, then it's hard to really justify big valuation. The good news is that a lot of these firms are growing at warp speed, and they're bringing in capital, which is going to only accelerate growth. And so we feel very good about it. But another point I would make is that even though these aren't winner-take-all markets, that there's room for a lot of leading players, and I think there's a lot of market share up for grabs, which we can get to in a moment. There's a lot of firms that are getting access to capital that arguably everyone's not going to be a winner, and so you often see this in technology when the market is excited and valuations are high, that probabilities of success are quite high in terms of the market's view, and ultimately, there's only 100% market share, right? You can't have 20 companies that are each going to take 20% of the market, because the math doesn't add up. And so that's, it's really kind of understanding the companies. What is their differentiating point, and why are they going to grow and succeed in a competitive market? And so, that is a nuance, across companies that we try to spend time and understand, and have, a macro view or bigger picture view about the addressable market, but then also, confidence in what a company is trying to accomplish, what their business plan is, who their management team is. Do we trust them? Do we believe that they can succeed? And so those are all important elements of, I think, of the mix here. But going back to this point, it is a tremendous addressable market. If you think about, there's thousands and thousands of traditional financial services firms. There's thousands of banks in the market, and there's clearly a small group of very large trillion-dollar banks, but there's thousands of smaller banks, and many smaller financial institutions are still operating in a legacy framework where they have a lot of disadvantages. If you think about the world of the past, it was all in person. it was high touch, and it was high infrastructure costs, high people to operate these companies, and not a lot of automation. And we're moving towards an environment where, I'm not saying that bank branches are necessarily going away or that people aren't going to work with financial advisors. I think that financial advisors have a bright future, but the ability to deliver financial services at a very low cost and scale them on a technology backbone, really what that does is it drives a much lower cost to deliver for the leading fintech companies, which puts them at a an arguably competitive advantage relative to some of these legacy incumbent firms that have a high cost to deliver and a lot of tech debt and inefficiency, and a lot of times channel conflict internally where they don't have motivation to really upgrade their business model. And so and then the last point is they're not getting that the valuation room to be able to grow their business and invest into it, because they're being valued on legacy frameworks like a price to book value basis, where they have to put up relatively high operating margins and return on equity for investors to own their stock. And so they're more constrained around how they operate their businesses. And so there's a lot of competitive disadvantage as I think about kind of the incumbent financial market. And so therefore these fintech startups have an opportunity to disrupt and take market share of really huge addressable markets. And so where I see things going is this world of connectivity where you're connecting together all these financial products so that you're helping that end customer optimize their assets and liabilities, as we talked about. But ultimately, that's going to create an opportunity for the firms that are providing that opportunity to truly scale and have, I think, a productive economic model, because there's just such a large market. If you go across banking and lending and investing and insurance, and then you start to think about expense management and all the other aspects of having a more sophisticated financial life. And so I think this is ultimately going to be very good for financial services companies, because it's going to provide an opportunity to provide better information to them to make better decisions, but ultimately for them to help provide better financial products to their end customers. So we're excited about kind of where things are going here, and see a number of firms that are really starting to break out and deliver a better experience for either their customers as companies or their customers as the end consumer.
So we've sounded very optimistic so far on this podcast, which I love. What concerns you about the space, or do you think there are things that would cause you to change your view on being overweight on many of these?
Yeah, I think there's always a couple things. One, the macro environment. So we've been in a very conducive macro backdrop for a number of reasons. One, we just went through the pandemic where people spent the majority of their time online. So that really accelerated some of these themes that we're talking about, and people's comfort and really need to understand using technology and digitization of the economy. And so I think that's been a positive, but clearly there could be negative aspects to the extent we go back in the other direction, and people are concerned that maybe as the world opens back up, that people spend less time online, and so that slows growth in some of these business models, and so that can have a negative impact on enthusiasm around their businesses. So that's one area. I think the market backdrop has been conducive: low interest rates, high equity valuations. So that's created I think generally a good backdrop for a number of these businesses, and that could change. And then the regulatory frameworks. We're in a new administration here. There hasn't been big policy change or regulatory change thus far, but I think there's a number of areas that Gary Gensler in the SEC are focused on, whether it be topics like payment for order flow, which still receives a fair amount of attention, or how crypto markets are regulated, and that could create friction that changes the trajectory in some of these businesses. So I think there's still a number of areas of uncertainty that we're watching closely and could create friction points in a near-term sense. When I take a step back, though, we're constructive, because as you think about money moving, financial services is an interesting space because money moves slowly. Unlike other areas where technology can be disruptive and disrupt a business over the course of months. In financial services, people don't generally move their bank account in a couple weeks. They may know there's a better offering out there, but it takes them time, or they have a relationship with a financial advisor, and so they're not going to move quickly. But ultimately, money does accrue to where there's the most value. And so to the extent that these businesses are providing value to the end customer, and that value differential continues to grow, then those businesses are going to continue to gain traction. And I think smart regulation, the regulators are looking to protect the end consumer, and I think that's generally a good thing. Sometimes there's unintended consequences, but broadly we're constructive around the direction we've been going here, and feel like these are issues that typically, if you have a good kind of fundamental backdrop for the space, those will get resolved.
If you had to pick something that you're most bullish on going into 2022, where would it be?
Well, I think 2021 was the year of the consumer-facing platforms, the Robinhoods and SoFis, and there's many others, by the way, that have gained substantial traction and are going public. They're doing SPACs and they're getting a lot of attention. And these are brand names that people know. I think as we look into 2022, there's a big opportunity for these picks and shovels businesses, as we were talking about earlier, companies that are providing the infrastructure to financial services. AI, we actually hosted a conference a couple months back around just the theme of artificial intelligence in financial services. And, it's just going to be, I think, a huge theme. Everyone talked about mobile as a theme, 10 years ago. No one talks about your mobile strategy today. That's just part of your strategy. You have to have a mobile strategy or your business isn't doing very well. And AI and machine learning, I think this is something where firms are trying to understand how they can implement AI in a more impactful way, and as the capabilities improve. But in 5 years, it's not going to be about your AI strategy. You have to have AI and really smarter technology incorporated in your platform just as part of your ongoing business strategy. And I think that then takes a step back to the power of data and just how data is going to be utilized and aggregated. And so I think those are a couple of big themes we're watching. And then just the evolution of the digital asset space is just a really tremendous opportunity. There's plenty of uncertainty around where we go from a regulatory perspective. And I think that's something that we talk to investors about quite a bit, and people are trying to better understand. But to me, we're in the very early innings of this, and it's one of the most exciting developments as I think about kind of where this space may go. Bitcoin, as everyone knows, is the original blockchain digital asset. And we think that Bitcoin has a very interesting use case, and obviously is being viewed as a digital alternative to gold or digital store value, and has gained a lot of momentum here as inflation has accelerated, and people are really looking to opt out of existing financial systems or as a hedge. And so you have this network effect that's built where there's 150 to 200 million plus users in that network, which is incredibly powerful. It's essentially on par with the internet utilization, which I think just gives you one data point. But in our opinion, blockchain and the digital asset space is way bigger than just Bitcoin. And so there's so much development here happening that is incredibly exciting to us. We think we're in the very early innings of use cases developing, and this notion of Web 3.0, which I think is a great analogy to where the world is going. What that means to me is that you're essentially transferring value from third-party intermediaries, whether it's in the technology field or financial services or other products and services throughout the economy, and you're transferring that value back to the end user. So the end user is able to monetize their time and their energy in ways that haven't existed before, and so that's incredibly exciting. Now, again, I think the devil's in the details of how this all gets implemented and what the network effects are around the various cryptocurrencies or digital assets more broadly. But I think we're in the very early innings there, and there's some really great companies that we just highlighted in a report called Digital Assets Innovators, and we highlighted 86 or 85 companies in that report, over 50 of which are private. But there's just been tremendous growth in that ecosystem really over the past year.
Fascinating. Well, on that point, we should have you back in Q1 of next year to follow up on the DeFi trend, because I'm sure that there's going to be a ton that continues to happen in the next couple of months. In the meantime, thank you so much for taking the time, Devin. It was great to catch up with you. Next time in New York, we should catch up as well in person, since it's been too long.
Love to see you, Julie. Thanks for having me on, and have a great holiday, and we'll talk to you soon.
Thank you. You too, Devin. For anyone else that wants to follow along with FinTech, go to fintechtoday.co and you can sign up for our newsletter and stay up to date on everything happening in the space. Thanks, guys.